Hey everyone, in this video I'll be adding 3 trades to our option selling portfolio. Right now we are currently flat on our portfolio after last week, and by the end of this we will have 3 trades on, and I'll be making another video shortly after about a option buying trade that we'll be placing to act as a hedge for our option selling portfolio. Now, to get things started off, I want to talk to you about how I found these trades. They were found using 2 scanners in the PA terminal. One is the distressed volatility scanner, and the other was the expensive option premiums trade. So right off the bat, 3 of the trades that we are looking at right now are on this scan right here. We are looking at DWAC, we are looking at TH, and we are looking at TCOM. Now, the reason these trades are of interest to us is because when we're selling option premiums, we don't just want to be selling the ones that are high, we want to be selling the ones that are expensive. And what that means is we want to be comparing what we're seeing in the market to our own forecast of option volatility. And that's what this scan allows us to do. It takes the market implied movement and compares it against our statistical forecast of market movement or ticker movement. And the ones with the biggest difference are the ones that appear on this list. Now, to start things off with DWAC, the reason that this one is at the top of the list is pretty obvious, right? If we just go DWAC, and we take a look here, we can see the ticker has been trading flat for quite some time, but obviously Truth Social, this is, the Donald Trump social media network. It's got a lot of hype around it, so there is the potential for some very big movements, especially as news comes out. However, there is also a lot of delays happening around this ticker. So what we've seen is this risk premium persist for quite some time. Now, looking at the premium tracker here, it looks like it's creeped up, but if we look at the low end of this, it's still above 1. So being above the 90th percentile right now is a really good indicator that we should be selling some options here. Now, I've been wrong about this before, but I'm thinking to keep this actually a very controlled size. I don't know enough about this ticker to really, step on the gas here and leverage up. But these are also those situations where this risk premium is extremely high. And if you have some sort of forecast on when news should come out and what should drive the realized volatility here, there is room to potentially leverage up a little bit on a trade like this. But for myself, what I'll be doing here is probably just selling it in pretty small size, sticking to that 1 to 2% of the account risk on a trade like this, which is when I stress the position, I want to be risking about 1 to 2% of the account. And I'll be stressing to about, let's say, 100% of the straddle premium. So this is the first trade here, DWAC. We can go ahead and throw that on in the account. So let's come here, option chain. I'll be selling pretty short dated on this. I'm thinking, end of October, something like that, maybe 9 days out even. Let's see if we come here, we build on our strategy builder. Let's see what we're looking at here. If we go to the 16 strike, if we were to sell both of these, it's about 1.2, right? So we're gonna get about $1.20 for selling this, which if we open up the calculator quick, right, and we do, 1.2 divided by 16, it's about a 7%, 7.5% up or down move over the next 9 days. That's pretty good, right? Up or down 7% over the next 9 days. If we take a look over its movement recently, we can see that, over the last 1 day, 5 day, 1 month, we have not seen that level of volatility. Even if we look at like the highs and the lows, right, 7% has pretty much been like the biggest change that we've seen, which would result in a break even for us. And 14% move would be the break even that I would set on this trade. So overall, I think this looks pretty good. And what I'll be looking to do here is sell 3 lots of this, right? About $300, which puts us at about 1% account risk. I'll start with this, and maybe I will leverage up a little bit in the future. Let's see here. If we come here and let's do $1.23 or $1.20. Let's start with a dollar. Let's start at $1.25 here and see if we can get a fill. All right, the trade's in. Let's see here. No fill. We'll work it down a bit. Let's go to $1.20. No fill for us. And we'll bring it down to $1.16. All right, looks like we're gonna start getting fills here. There we go. So we're in at $1.16 for the October 20th expiry, 16 strike short straddle on DWAC. Now let's come back over here. The next trade that we're going to take a quick look at is TH. Now this is one that it's been not the most rocky of tickers here, but it has had some volatility, which explains why we're seeing, a pretty high risk premium here, sitting at around 78% for 20 days, right? It's pretty high. But if we go over to our premium page, we can see that the premium tracker is showing us a really, really high level of volatility here, sitting at 1.72. I actually want to check something quick here. Let's change this to be the realized volatility. And we can still see that it's up near that 90th percentile, right? So if we switch it from looking at our forecast versus implied to realized versus implied, we still see this huge premium. That's pretty much the core of this trade. I looked into the news happening around it. There's nothing that I think is going to happen here over the next 10 to 30 days. So I'm feeling pretty comfortable selling volatility here. Let's just do a quick check on when, yes, there's no estimated earnings yet. I was thinking about keeping these pretty short dated as well because, just typically speaking on the shorter dated stuff, there is obviously more risk of things moving a lot, but there's also just, more of a premium because you have more of that gamma exposure. So what I'm thinking of doing here is something similar. I'll go about 10 days out. Maybe we'll go 20 days. Let's take a look. TH. So we have a choice of 9 days out or 37 days out. Given that I don't really have much of a view on, that medium-term volatility, it's really just that right now it's high. I'll probably just come in here and sell the 16 strike vol. So let's go ahead and do that here. 80 cents, 60 cents, right? We're getting a pretty wide break even here of about, let's say, $1.50. If we open up our calculator again, we do 1.5 divided by 1.5 divided by 16. We're getting about 9% break evens, right? If we stress that to a 100% move, that's about 18% break even where we'd be cutting our losses. So I'm pretty happy with that. I'll be selling, let's say, 2 lots of this. Let's come in here and let's go for, start at $1.60 and see if we can get a fill here. And let's work this down to $1.55. No such luck. Now, by the way, with trades like this, TH is one that we've traded for a few times now. There we go. $1.50 is the fill we get. Now, I expect that the edge here is probably about 50 to 70 cents. That's typically what we're seeing, where there's just this consistent inflated risk premium. So I think that we'll be collecting around $100 by putting on these 2 lots within the next 10 days. That's sort of the idea behind this trade. And what we'll do now is we'll come over here and we'll actually take a look at the last trade, which is FYBR. I know I mentioned TCOM at first, but for this video, FYBR is one that also showed up. It was on the distressed volatility scan. Where is it? Is it no longer on here? Let's update this. Oh, here it is, FYBR. Now, FYBR is one that has a 4.31% implied move, and that is pretty good. I'm pretty happy with this size of implied move. This is one of those tickers that has been a really good short volatility trade over the last little while, similar to TH, where it sort of just bounced around between this $14 and $17 range. So similar to before, that's kind of what I'm looking to do here. I'll probably be placing a strangle for this one, just to give myself a bit wider break evens, especially since it's the 15 strike and the 17.50 strike, and we're trading at $16 right now. So what I'll be doing here is I'll be selling the 15. The 15 put, right? And the 17.5 call, getting a 45-cent credit for it. So our break evens here are basically $14.50 and $17 and about $18. So if we take a look here, we're trading at 16. So if we do 16 over 18, right, we have about 12% break even to the upside. do 14.5 over 16 and about a 10% break even to the downside over the next 9 days. On this trade here, we'll go ahead and we'll sell 3 lots of this. Yeah, let's do 3 lots here. Cool. Might size that up in a little bit, but I want to keep this video at a reasonable length for you all. So let's go ahead, and we're not going to start at 45 cents. No, no, no. That would have been a mistake, right? We would have just been hitting the ask. Let's come in here, go to 55. Hopefully we'll get a fill right now. Nope. Let's lower this down to 50, and we should get hit here. No such luck. Well, maybe I'll just let this one sit. There's no real rush on these trades, but there we go. We get our fill at 48 cents. All right, so there you have it. There are 3 trades that we've placed just now. We've done a DWAC short straddle, a TH short straddle, and a FYBR short strangle, all of which are on a 9-day expiration. So over the next 9 days, we will see how these 3 trades play out. All of them are pretty much following the exact same logic of just saying, we think that there's expensive short-dated premium here. If you have any questions about this trade, feel free to hit me up in the Discord. I'm more than happy to chat about it. Or if you want, I don't know if you know about this, but if you use this chat box down here in the right corner, you're able to just reach out to me and we can chat live. This goes right to my phone, so you can pretty much bother me at any time. All right, cool. Thanks so much, everyone. Good luck trading.